buzz is brewing today. Energy tech startup EMO Energy has raised $6.2 million in a Series A funding round that was led by Subcom Ventures with participation from existing investor Transition VC. The company is going to utilize these funds to scale its 2- and 3-wheeler energy solution to more than 1 lakh vehicles in the next 2 years, while also advancing the deployment of 1 gigawatt hour of energy storage. For more on these plans, this funding and what lies ahead for the company, joining me now is Sheetanshu Tyagi, who is the co-founder and CEO of EMO Energy. Sheetanshu, welcome to Startup Street. Thank you for your time here, and congratulations on the $6.2 million Series A funding round. You know, what does this milestone mean for your EMO Energy's journey so far, and how do you plan to deploy this money?
Thank you so much for having me here. So EMO Energy is 3 years old, and we've, over the last 3 years, really proved out how a fast-charging, high-power, a safe solution can be built out for 2- and 3-wheelers, both on the battery side and on the charging side. So now the intent is to basically expand this all the way up to 1 lakh vehicles, like you mentioned. And for us, this is really that milestone that allows us now not just to experiment, but to scale to basically everywhere. So dark stores and logistics hubs basically come onto our platform, and energy storage becomes a big piece of the entire story for us now.
All right. Since you have plans to scale your 2- and 3-wheeler energy solutions to more than 1 lakh vehicles in the next 2 years, how do you plan to address the potential challenges? For instance, infrastructure gaps, OEM partnerships. How will you overcome all of that to achieve this goal? What do you have in mind?
The last year has really been instrumental in shaping up some of these partnerships. So now we have multiple OEMs on board on the 2- and 3-wheeler side. We have a couple of standard battery packs already certified with multiple products. We also now have the buyout of the actual end user. So we've been working directly with Domino's, with Big Basket, with Blinkit to really understand their bottlenecks and what really has stopped this market from scaling to become so big. So now we essentially set up the infrastructure, the charging solutions as part of their hub. We essentially establish energy backup for them too, so that we have a solution there, and we deploy vehicles with our battery to then deploy a fast charging solution. So it's an entire management solution now for essentially hyper-local delivery to scale.
Okay, give us a further breakup. EMO, of course, aims to deploy this 1 gigawatt hour of energy storage. How will this be distributed between, say, mobility, commercial energy storage applications, and so on?
Absolutely. So the 1 gigawatt hour for us is basically divided into 2 major products. So it's the 10 kVA, which is essentially for industrial and home applications, and the 250 kVA, which basically becomes commercial and industrial applications. So now across this, we basically have a lot of industries, a lot of apartment societies, and a lot of companies interested in adopting this as a replacement to diesel gensets, as a replacement to essentially setting up excess solar, and basically becoming the energy trading system for a lot of these microgrid applications that are coming up. So the next year is basically going to be for us to become the urban energy solution partner for everybody, all the way from housing societies to dark stores to OEMs who are then involved in linking all of this.
You're catering to multiple industries. You've listed down clients like Big Basket, Domino's, to Blinkit. Which industries would you say you're seeing the largest demand coming from? And how many clients are you currently servicing, and how many more are you looking to add, say, in the next year or so?
Right. So the good thing is that all 3 companies that you mentioned are essentially going after the quick delivery model now. And that's pretty important as a system to understand, basically to scale across multiple customers. So we essentially have almost 2,000 vehicles already deployed. We're doing at least 1,000 a month now, basically because of the new funding. And the intent is to keep basically doubling that amount every couple of months now. Because in terms of demand, we essentially have the 1 lakh vehicles that we want to deploy over the next 2 years. In terms of demand and in terms of orders, it's basically the funding now actually accelerating scale up for the factory, scale up for the entire operations team to actually manage this level of deployment over the next 2 years.
All right, and what does that mean in terms of your financials? What sort of revenues are you generating? What sort of profits are you generating? And what is the expected trajectory from here on?
So on a product level, the good thing for us is we're excessively actually focused on trying to drive down the actual cost of product here. So we're within 5% of market standard, even for a solution that is at least 2 times the life and at least 40% better charging speeds. So in a unit economics, we're upwards of 25% margin positive. We're actually CM2 positive in that regard. And the intent now over the next year is to be EBITDA positive. Our burn has been probably the most capital efficient in this market. And over time, we've essentially done over 25 crores in this year. And the intent is to basically go 5x of that in next year.
All right, EBITDA positive by next year. But Sheetanshu, before we let you go, across electric two-wheelers, light commercial vehicles, industrial green energy storage systems, you're targeting what you peg as a multi-billion-dollar addressable market, but the ecosystem is also very competitive. How are you, planning to differentiate yourself as more and more players enter this space, in the EV space, in the energy storage space?
Absolutely. The good point is that for us, the focus has always been technology. So today we have a 30-person R&D team. We have an entire prototyping and a manufacturing facility that quickly iterates products to essentially keep iterating to the point where we believe that within this sector, we should be what we believe is the battery experts, not just for India, but starting from India for the rest of the world. So the key focus on software, the integration of hardware, and the fact that we do pretty much everything else in-house except the cells itself is a key differentiator for us. Like, we didn't start off as an assembly company. We started off as a software, as a technology company. So actually integrating a lot of parts of the solution, working on different parts of this problem to address the high-level solution here, that really will differentiate us over time. And the fact of the matter is that as a company, we are obviously very open to cooperation and partnerships with multiple larger stakeholders. So today, out of everybody you see really spearheading this energy space on a larger company side, we're already working for multiple partnerships on how to deploy batteries, how to license this technology, and also to set up combined manufacturing in a lot of these situations. Because the intent is to scale as a unit and as an ecosystem first, then to just keep valuing ourselves more than anything else. And that is a big part of what we're doing.
And we wish you the best with those plans, Sheetanshu. Thank you very much for joining us here and helping us understand what you're doing, what you're building at EMO Energy. Thank you very much. Well, we're going to have to take a short break on that note, but up next, cricketer Ajinkya Rahane joins a group of investors that are backing deep tech startup Proxtree in its $3 million Series A round. We'll put the spotlight on the company and have its founder join us on the other side of this break.